Hello there, and welcome back to my YouTube channel. James here as ever for today's very important video. If you are doing performance management, that's the F5 or the PM paper for your ACCA upcoming examination. My name is James, I'm an ACCA qualified member, and my YouTube channel is set up just for you watching, an ACCA student watching from wherever you may be around the world. So, what is the point of this video? Well, Mohammed, I got your question, I got your query, and today's video is dedicated to you. We're going to be going through the actual March and July actual scenario one from the sample paper. So I'll put the link so you can access it in the description below of this video, along with all of the potential books that you may want to buy for this particular module as well. So we're going to go through it from actually calculating the variances in Part A and Part B, and then actually talking about the sales performances as well. Perfect preparation in order to how to pass the actual PM and F5 paper as well. If you are new to my channel, feel free to subscribe, the button will be at the bottom. And again, even if this isn't your actual module to do, feel free to leave me any questions, any queries or thoughts on the video when we go through the question, what you would like me to consider yourself that would help best. It's 100% student-led, I answer every single question, and it's so pleasing the videos are helping so many ACCA students around the world as well. So, without any further ado, I think we should get stuck into the question. Make sure you've got it loaded up, give it a try beforehand, and play this video back in your revision. It's really going to help. Trust me, past paper practice on this particular examination is critical. So, without any further ado, 3, 2, 1, go. So, as you can see on my screen, nice and easy behind me, what we have here is the performance management sample questions from March and July 2020. So I'd recommend that you actually access this document. The link is in the description to this video. Have a go at it yourself. We're going to go through scenario one in this video, as I said, and you've got the induction screen here as we go through. So scroll down to what you've got actually in front of you. Have a go at it first, and this is the actual sample question that we're going to be going through for Clearco on here. And for those of you who sat this examination, oh, it'll all be flying back now, but don't you worry. I'm going to be going through it nice and easy for you, step by step as well. So these are the actual requirements that we're going to be going through. I'm going to walk and talk you through, make as many notes as you can as well. It's all designed to add as much value to you as possible. But I can hear you there saying, going, oh no, James, what on earth is this? Oh my word, where do we even begin? What are you going to do? How are you going to shine some light on us today to get through this? Look, would I let you down? This is what I'm talking about. So this is my sort of mindset and thinking process and teaching style as to, if I was in your situation, how would I be attempting this actual style of question for the performance management examination, F5. Well, as you can see, and I'm jumping the gun now as well, we've got the question analysis on here. But first of all, the main tactic with any ACCA question is straight down to the requirement, because we need to know what we're actually looking for as we walk and talk it through. So, coming down to scenario one on here, and I'm just going to have on the screen now, just so you can maybe take a photo of it or note anything down. All I'm interested in are, what are the key facts? What do I need to get down on here? I've also put on the right-hand side, as you can see on there, the number of minutes per marks on there. So for 4 marks, we've got 7.2 minutes. For the 2 marker, you've only got 3.6 minutes. And then we've got 10 marks at the bottom. Notice as well, I'm underlining and paying attention to all of the key words on here. So for Part A, we've got to calculate total variances for the lens treatments. Okay, so we've got 2 on there. I'm making sure we identify for which company. We've got to identify as well the sales mix contribution variance and the actual sales quantity contribution variance. So automatically I'm thinking sales, I'm thinking quantity, I'm thinking contribution as well. And we'll come on to this in the question analysis, that these are the things when we go through a requirement we should be looking to pick up on as we read it through. It's a really good time-saving technique in an examination. Now, as well on here, notice my little numbers, 1 and 2, that we've got to identify 2 key areas to get those 2 key marks. If you don't answer the 2, you're not going to get 2 out of 2. But we've got to explain each of them and refer to the sales mix contribution variance and the sales quantity contribution variance on here as well. Now, coming on to the 10 marker, usually end of the actual requirement where some students may be nodding off, but 10 marks is nearly half of this requirement. But first of all, using your answers from part A. So this is where you get your own figure marks. So even if you get the wrong answer, as long as you apply your figures, you will get some marks from this. If you don't refer to your answers from part A, well, wave goodbye to marks. That'll be the end of it for you, I'm afraid. But thinking back on it now positively, let's go back to other relevant calculations, and we've got to refer to the sales performance. And can you see how the examiner's actually putting capital sales? The reason for that is in the external examiner's report, if you don't talk about sales, which happens year on year, you are likely to be one of the few that fail this examination. If you don't talk about sales, you're not going to get the marks. Also on there, you've only got 80 minutes for this. I have done an actual video on my YouTube channel where you can actually do this style of question, a 10 marker, 2 time, and it's a study with me video. So check it out on the actual YouTube channel. It'll be really helpful and it'll hold you accountable as well. I wish I'd have had it when I was studying. And finally on there, not to miss out on what it says on the notes. So there are up to 4 marks for additional calculations relevant to, again, they've given you the trigger on there to sales performance. So whatever you're calculating, it's got to relate to some form of sales, and then 6 marks available for discussion. So in other words, that tells me that you've got to come up with 6 really good points in terms of stating what it is and then explaining why it's important to sales performance as well. Without 6 points, you're not going to get 6 marks on there, I would say. And overall, for the 20 marks, 36 minutes in the real exam. That is because you get 180 minutes in the actual exam. Yes, I know, give or take the 15 minutes of reading time, but let's keep it simple. Divided by the 100 marks, and that gives you 1.8 minutes per mark, hence where it comes from on here. If you check out some of my other videos on my channel, I've got more tips in terms of exam techniques, so check them out as well. But let's come back up to what did I pick up on in the actual question analysis now. So what we're doing now is you're getting the insights from my experience as a tutor and from being a student. I'll walk and talk you through as well, and what am I thinking? So Clearco is an eye treatment specialist, so think of the actual type of product. Can I relate that to a narrative question later on? Founded in 2004, which runs 5 clinics nationwide. Okay, so it's not just a one-off, it's actually operating nationwide rather than locally. It's based in Zealand, a country in which 20% of the population is over 65 years old, compared to only 15% 10 years ago. So in other words, an aging population, okay? And if we're looking at eye treatment, well, that's going to increase demand as a result. Clearco offers 2 eye treatment procedures, so we've diversified a bit. We've not put all of our eggs in one basket. We've got laser treatment. Notice how I've got the little one on there, so I know the difference between the two, and a lens treatment. The laser treatment, so number 1, is less complex of the 2 procedures. Okay, so that's sort of how it's put into operation. Trying to visualize this in terms of how it was going on. But then what have we got here? The technology changes rapidly in this industry, and as a result 90% of the patients now qualify for laser treatment compared to only 80% 5 years ago. So in other words there, read between the lines, there is a larger target audience in terms of who will actually purchase our products, whether that's a laser treatment or the lens treatment. The laser treatment is less complex as well, so that may actually have other implications later on. We shall see. Well, let's rock and roll and keep going on this now. So the remaining 10%, so where's that coming from? So that is coming from, that 10% there is referring to, well, as a result of 90% of patients now. So we've got 90% in the previous paragraph. This is now referring to the other 10% of patients are only able to have lens treatment, of which there are 2 types. So we've got refractive lens exchange, so the RLE, and automatically I'm thinking, looking down, I've seen RLE at the bottom in terms of lens treatment, so it's going to link into those figures at the bottom. And what else have we got on here? We've got implantable contact lenses, so ICLs. So Clearco started providing RLEs, a treatment most effective for patients aged 40 and older. Okay, so that's our first threshold there in 2004, so when it was founded. 2 years ago, It also began providing ICL, so we've diversified into that other area now. A treatment recommended for patients under the age of 40. Okay, so as you can see now at the bottom on my notes down there, I've got RLE in terms of over 40 and ICL is under 40. Really good way that you actually picture what is going on. And I don't know, maybe you can think in terms of which bracket you would fall under, but that's a whole different YouTube video. Anyway, moving on, more importantly, into the final paragraph now. The market for eye treatment procedures in Zealand, so where they are operating, is dominated by a few main suppliers. Okay, so sort of a oligopoly here, potentially, of which Clearco is one of them. Okay, so we're really quite dominant. We've got lots of market share. Oh, hang on. Well, it says until 2 years ago, Clearco, so the company we're looking at, was the largest supplier, but following the merger of two other companies, okay, so they were two separate companies, they've now come together and merged into one, so they're more of a dominance in that market. It is now the second largest, so we've gone from top to second largest, so still doing pretty well. But the merged company, EOSCO, so another name there. Maybe we can refer to that in the narrative. So Clearco, EOSCO, there could be a mark or two in that, has recently released its financial statements for the year, showing profits that were 10% higher than forecast. So the number one competitor has been doing better as a result. EOSCO's press release stated that it has achieved this despite offering reduced prices. So reducing prices, for the ICL treatment, so they're targeting under 40s, probably less disposable income. It has been able to offer this reduced price because of economies of scale, right? So because you've got two entities that have merged together, that means that they're probably going to be ordering in vaster amounts of quantities, hence lowering the unit price. So they can sell at a lower price, and they're actually still going to have a good, healthy margin on there that has our 10% higher forecast. Other things to consider with a merger, economies of scale, you've got to get down the keywords of productivity, efficiency, lowering wastage. These are the things that come to my mind when I read this through. And finally, we've got the actual figures at the bottom on here. So the following information relates to the two types of lens treatments offered by Clearco. So taking the narrative information from above, now I've got some figures on here. And I've just noted on there that the RLE is for 40 or over. So again, just I'm trying to picture it a bit better. And the ICL is under 40 on there. We've also got, and this is where you've got to, this is one of the key areas where people get really mixed up and will lose out on marks on this particular, on the performance management examination, is they get confused by budget, what did we hope and what did we, well, budget for, should I say, before the period, versus actually, so physically thinking about how Clearco operates in terms of the lenses, being an optician's, in terms of that's their sector, that is what actually happens. So try and picture that actual eye surgery going on with the lens treatment, and that's where it comes into it. Notice as well, I put this black line right down the middle there. You can actually do something in terms of that if you're writing it face to face or if you're doing it online. Cut it out or do something so that you can actually articulate it so that you know what is the difference between the two, so you don't mix up the figures as well. Now let's head over to the left hand side because there were some real giveaways here as well. So we've got the number of treatments, so that's actually quantity. Then we've got the selling price, and I'm saying these with a bit of emphasis because we've heard these in the requirement now. The next thing, and annoyingly slightly cut off on here, but it's probably because I've edited it, but it's got variable cost treatment. So the alarm bells are ringing to me now, where selling price less variable cost, as you can see on the left hand side of my notes, is equal to, well, that is going to give us the contribution. Automatically, I'm then trying to be picking up on, I'm going to have to contribute to my answers by calculating contribution. Notice how I saved that. Oh, you say, well, professional as ever on the channel. It's all right. But now let me take you through. That is the analysis there of the question. What I thought about when I actually went through it. What I thought in terms of the analysis. Now you've got to be going on to the actual answers. So if you haven't already, pause the video now actually go away and attempt this question, see how you get on, because I'm going to analyse the answers top to bottom. So you're going to have all the figures referenced, and I'm going to walk and talk you through. So I know the video is slightly longer than expected, but you're going to get so much added value out of this, okay? Trust me on it, I really want this, because once you compare the ACCA's answers with my notes, this is going to save you hours, trust me on it. But let me come on to the actual answers now, and again, the actual answers, the document is in the description to this video below. So these are the actual answers that you are provided with by ACCA. That's very kind of them, isn't it? Look at all this, look at all these numbers, and I can hear you on the other side through your computer going, oh my word, James, what on earth is this, and how are you going to make this fun for me in terms of, you might be watching this in terms of a late day after work, or a I'm not very motivated sort of thing. Don't worry, I've got you. I've got it covered. This is the beauty of having it here. Well, these are my actual answer analysis. So hopefully you've had your own go at this so far. This is where I'm going to walk and talk you through how we're actually going to calculate all of the various different aspects. So I'm just going to head back to the actual requirement here so you can check them off as we go through. So in the actual requirement analysis, we're going to be calculating the sales mix contribution variance for part I, and then we've got the sales quantity contribution variance. Notice how they've got contribution in there. We've already seen it in the question analysis. We're already ahead of the game. So let me take you back to the actual answer analysis now, and let's take you through. So if you need to take a screenshot of this now, feel free to. It's all there for you, but all of the actual aspects are referenced on here. So I'm simply just taking the answers, and I'm just going to walk and talk you through now. So what have we got on here? Well, first of all, we've got to calculate the actual variance calculations. Nice and easy, but it's the little notes on the side how you can actually depict what is going on in terms of the numbers, in terms of the analysis on here, where I sort of read this first of all and I'm going, AQAM, oh my word, we've got to make this easier. So we're going to be working out the actual quantity, actual mix. So these are figures that are actually provided to you back in the actual question itself. So the 5,090s you can see on here, just simply totaling them up. But notice, keeping the RLE and the ICL completely separate. This is critical in terms of this, okay? Now, we've then got to be thinking as well, okay, well, let's carry on working this through. So we've got the actual quantity, actual mix, picked up on this earlier on. And again, I'm not going to go through and walk you through every figure. It's a case of you need to know where it's referenced from, the different methods. I can't hold your hand all the way, but this is going to be a really good way of doing it. So the next difficult area was actually calculating the actual quantity budgeted mix. So this is where the overall aspect of this question is to work out the sales mix contribution variance and the sales quantity contribution variance. But to get there, we've got to calculate a couple of other steps. So let me walk and talk you through. In fact, let's just pick up on the easiest of the easiest marks. Let's keep it simple. So you'll see here the standard contribution. We've already talked about that in the actual analysis, and I'm just going to walk you down here. And there you go. So simply taking the 3,000 from the selling price minus the variable cost is going to give us our contribution per unit of the RLE and the ICL. Nice and easy, and I've even put the pro forma there on the side there for you. The revenue or the sales price minus the variable cost is going to give you that contribution per unit. I've also put on there the fixed costs, less that gives you the profit and loss. That will help you out on other questions as well, all to add as much value as possible. So let me take you back up now. So we've got the 2.4 and the 2.5. Now notice, I'll use the mouse, that is where the figures are located. But coming on to the figures that were actually given in the examination, or should I say in the requirement, the actual quantity, actual mix, and the budgeted quantity, budgeted mix given for us nice and easy. It's these workings up at the top for the RLE and the ICL we need to pay attention to, because what we're saying here is take our budgeted quantity, budgeted mix, that's our 3750, divide it by the total for it. So this is where we're working out what should be the actual proportion for this in terms of the fraction, and then multiplying it by the actual quantity to the actual mix. So the 5090 is from our top figure here, and that is going to give you where that figure came from for the 3764.7929. Bit of rounding on there, but that is just so you know where it's referenced from. Nice and easy. But it's a case of, I saw the one figure and went, oh my gosh, the YouTube subscribers, they're not going to like that figure with no workings. And again, I've done the same for the ICL, exactly the same process, 1320 divided by the 5070, so divided by the total, gives us the proportion for the ICLs, and then multiply it by what was the actual quantity of the actual mix. Nice and easy, first marks in the bag. Get them set in stone. Because then these are this is the lock, okay, in terms of the key that we're going to open now to answer this question, because that, by having those three nice and easy levels on there, are going to be able to calculate the actual sales mix contribution variance and the sales quantity contribution variance. Keep it simple. Let's go one by one, okay? And I've put in some little references on here as to where the figures have come from as well. Let's keep it simple. So there are actually two methods for you to calculate this through. I'll take you through both. You make up your mind as to what is the best for you. Okay, so we've worked out these figures here now. We've broken it down, we've split them up. But now I'm just going to roll it down so you can still keep them in play. And this is where, and I'm going to have to give a bad mark to ACCA on this, because I saw mix variance and quantity variance. I went, that doesn't tell me what was in the requirements. Hence, I've put in the little extra note on there for the, or should I point up here, for the sales mix contribution variance, as to where the figures have come from in terms of it. So first of all, I've put on there where the 876504 came from, favourably. This is where, note on the far side there, you've got favourable and adverse. Get it jotted down as to, are we in a better, favourable position, or an adverse, a worse off position? Really key you identify that for the actual marker. It was another thing that came up in the external examiner's report, that students don't show it clearly enough. So you have been warned. And if you look on the actual right hand side, I've put on there for you the minus 913,025 plus the actual favourable 876,504 favourable, okay, gives us a total overall of an adverse and negative 36,521. Nice and easy. Let's keep it that way. So as we carry on now, we've got the quantity variance, so sales quantity, contribution variance. Notice how we're linking these things in now, and notice how we're taking the actual contribution. If we hadn't have worked that out first of all, we'd have been absolutely in trouble here. But I want you to focus now, deep breath, this is really important. Get some notes down on here, because in order to come to these figures, these four key figures here, we've got to be using, and I've referenced it for you, figures that we've already previously calculated or pulled from the actual requirement. So first of all, we're going to be saying here is, well, are we in a better or worse position in terms of the actual quantity? So we've taken the 4,130 less that actual quantity to our budgeted mix, so actual less the budgeted, and that's put us in a favourable position. Multiply that by the correct contribution for the RLE, then for the ICL, and that is where you get a favourable or an adverse amount. Hence our calculations on there. Then the exact same process as before for the quantity variance. So for the sales quantity contribution variance, what we're saying there is, well, what did we actually get in terms of quantity that we actually had in terms of our processes? So in terms of the actual proportion, we had the 3,764.79. And then we compare that to, well, what did we actually budget? Well, we only budgeted for 3,750. Well, that is going to be favourable for us. We've actually got more than we expected to. So hence, that is where our 35,496 favourable comes into it. After that, simply take what we had in the RAL column, plus it to, or minus it should I say, to the ICL column, and that is where you'll see in the highlighted Z, I've also highlighted in the Z below the actual figures we are looking for as well. An adverse figure of 36,521 and a favourable figure for the actual quantity variance of 48,521. Okay? So this is where we can now actually calculate it in a sort of method 2, or as they've got on here, an alternative quantity variance calculation. So in other words, we're going to get to that 48,521, but in a different method. Whatever works best for you. It's referenced on there. Take a screenshot. I don't mind. But let me pull it on here. Well, you should just be able to make it out actually. But first of all, the 3,750, again, just pulling figures from up above. Be careful to keep the RLE and the ICL completely separate here. We're going to get the total contributions for both of the actual products there, for the over 40s and the under 40s. Obviously, careful on age, James, it's alright. We then have the actual budgeted total quantity sales. So I've referenced it on there with a little y up at the top so you can get the figures. In other words, we're just sort of mixing the figures around. We're going to come to the same answer though. But the key step comes here now, that we're going to take the total contributions, divide it by the budgeted total sales quantity, and that is going to give us £2,426.04. As you can see on there, I've referenced it, and we've got the weighted average of contribution. In other words, we've weighted it from how much we've got of RLE and how much we've got of ICL, and that has given us our £2,426.04. Now, you're going to be thinking, well, what figures have we not used in here? We've got to get the quantity variance as a result, or should I say the sales quantity contribution variance. Wow, the alarm bells have got to be ringing for you there, because can you see down here? I'm just going to ring it down so that we can definitely have it on the screen. This one here, I've got my mouse on it now. The £14.79 plus £5.21. This is really key for where do we take the £2,426.04 for our weighted contribution? What am I going to multiply it by? Well, that is coming from, and again, I'll scroll it back up, the difference between, as you can see from my mouse up at the top, the £3,764.79 minus £3,750 gives us our £14.79. Exactly the same process for the ICL to get our £5.21. That is our difference in terms of what was the actual quantity budgeted mix versus the budgeted quantity budgeted mix. Just simply looking at, well, what was the difference as a result? Nice and easy, multiply it over, and that's where we get our 48,521. Nice and easy. And I can hear you there going, James, that actually wasn't too bad. Oh my word, good grief. Oh my gosh, we've got Instagram on here now. I know, stop, well, oh, what a reminder, should I say. Gosh, well, if you don't follow me on Instagram, as you can see on here, I will be responding to all your messages, as I do, don't you worry about that. But we've got more important things. Feel free to follow me, all the details are below, it's alright. Let me carry on with this. We've got more important performance management questions to come on. Now, we're coming on to actually part B, and let me bring on the actual question on here so that you can see it, so that we get a bit of a reminder. And again, only 2 marks, so 3.5 minutes, give or take. And we've got to refer to the sales mix, contribution variance, and this is where, notice how it follows on from part A. So this is really good exam technique on here. So we've got the sales mix, contribution variance. Oh look, sales mix, contribution variance. Sales quantity, contribution variance. Sales quantity, contribution variance. So many students miss out on that they've already got a gist of, well, what are they actually calculating? We've already seen it before. The other thing is, as I've got down in my notes here, is, well, it's 2 marks, so one good sentence is really going to be okay for 1 mark here. But notice these key terms as we walk and talk it through. So, the sales mix, contribution variance, seen that before, measures the effect on contribution, changing the mix of actual sales from the budgeted sales. Let me take you back to the question. The answer on here look, explain, so we've referred to that in there, the sales mix contribution variance, woof, and measures. They actually use in the answer, look, we've got the effect on there, and we've got in terms of it what is actually looking to measure as well. And they've sales mix contribution variance. They've used the terms from the actual question and then just said, well, it's the changing mix of the actual sales versus the budgeted. Nice and easy. But it's little exam tips like that can make your life so much easier. It's all about looking at what's the effect of what's going on. Well, we're just looking at, and for the other part on here, the different total quantity versus the budgeted quantity. Nice and easy, 2 marks in the bag. Whew. Thank you very much, James. Good exam technique I will be using. But, alas, let us move on to part C now, okay? Now, the one that is a bit more doom and gloom in terms of it, but have no fear. Do not worry. 10 marks, 1.8 minutes per mark, 80 minutes, additional calculations, and then 6 marks for discussion as well. So if you've not got calculations and discussion points on your page, this is going to be super duper important for you. Let me take you through. But let's rock and roll as we go through. First of all, key thing to get down if you haven't already, favourable, adverse on there. We've got to be, making sure we're aware of these things because it's going to come up. Are we in a better or worse situation? But let me walk and talk you through what ACCA had down here as well. So we've got to be looking at, well, actual versus budgeted first of all, and first one to go to, and again refer back to that pro forma that we had later on, or shall I say up above. I forget that I'm at the bottom here, but up above, revenue. Got to start revenue, and as well notice the column format, which you can use especially on the computer-based examinations. But if you're doing this pen and paper, same format, pen and paper. Keep it columns, keep it separate, and if you wanted to, I've wrote 40 and over and under 40 as well up there. Keeps it so much simple, but you would have needed at least 4 good working marks on here to get the 4 marks. So we've got the actual sales on here, and I've referenced it on the side there. You can go back and actually look at these figures on here. I've simply taken what were the actual sales revenue multiplied by the quantity, and this is going to give us a difference in revenue. So what did we actually have less what we budgeted? Are we in a better or worse situation? Now this is where we've got the percentage terms on here, where another good little working step that lots of people like to work in percentages. This is what you'll have to do in practice, in business, or if you set up your own firm as well. You want to know how much better off are we this year? Well, all it's simply doing there is taking the difference and then dividing it by, well, what did we actually budget for? Because this is going to give us a really good accurate figure as to how much are we better or worse off from what we said we were going to do as well. And these are key figures on here that you are going to then refer to later on in the sales performance. So take note, these are the things that you have to refer back to your own figures from part A and in your extra calculations. But let's keep it rolling as we go through. So we've looked at the actual revenue, now we're going to look at the actual sales volume variance. So we've got to be looking at the actual quantity minus the budgeted quantity and then multiplying it by the standard contribution. So figures we've already got from before. These are easy marks not to throw away on here. I've referenced it on the side, and with the favourable and adverse, just to be clear as to if you want to put minuses on there. I know with the computer-based exams you've got to be really careful on there that you don't actually need to put in the minuses. It's a case of you have to put in the F and the A, but I'm just making sure some people will be doing it pen and paper, some will be doing it online. It's out there for you anyway, so just be careful. But it's really identifying that you're understanding the triggers and the key figures as we go through this as well. So we've now looked at the actual volume on there. So we're actually favourable for RLE and then adverse for ICL, as you can see on here. But overall we were favourable across the 2 products. We've then also got to consider, well, what was the actual selling price variance as well? So again, figures that we've got before, we've got the actual price minus the selling price on there, or should I say we've got the budgeted sale price, just a little note to get on there that it could have been a bit clearer, multiplied by the actual quantity. So looking at all the different variables in terms of and assessing this as well. But look, if you look at this from a actual perspective, very, very adverse as a result on here. This is something that you can then refer to as well. What figures stand out for you and why? Finally, we've got the actual total sales variance. Again, nice and easy figures you've seen before. So what was the actual price that we've got? And we've got the budgeted variable cost. So I know it says standard variable cost. I've put in budgeted there. It makes more sense to me. Keep it simple. You're not going to get marked down for putting standard versus budgeted. Do what works best for you. It's all about getting the figures and interpreting it, following it through. Are we in a favourable or adverse position? And notice when we go through the next part, at the bottom, these figures are going to be referred to here. So feel free to pause the video anytime to have a look at the figures or anything on those lines. But that was for the 4 marks up there in terms of out of the 10. Now you've got to take those figures and any other figures from part A, as you'll see down here, and we've got to apply them. Now, from an actual sort of examiner's tip and my sort of insights here, yes, we're going to have 6 marks for this, but there are key things and key notes on the side you've got to get down. First of all, what has happened? This is the key thing. I'm not going to go through all the actual aspects on here, and I'm going to walk and talk you through, but you'll notice me saying what has actually happened and then why has this happened. Okay, so identify and explain in terms of it, or we have the word discuss was used in the question. Identify, explain, and then refer specifically to the figures. So you can see on here already in the first sentence, the 32.25%, as you can see on here, that 32.25% is that 32.25%. They are referring directly to figures from what you've worked out. So everything underlined on here refers to what has happened and why has it happened. So when comparing the budgeted revenues to actual revenues, so again, budget to actual, keep it like that. If you want to do these sort of things in your mind, whatever works best for you, it can be seen that ICL, so referring to the actual specific line now, underperformed this year, picking out one of the largest percentages that was negative, with revenues being 32.25% lower than budgeted. Super. This is as a result of both lower sales volumes and lower selling prices in ICL. Mega awesome stuff, which has resulted in an adverse sales volume variance of $900,000 and an adverse sales price variance of $240,000. Super. I put 1 mark on there. That could have warranted 2. Depending how generous the mark was feeling. But I'm trying to be a bit harsh here because it's just to get across how much detail you need to be going into. Notice on here, why has this happened? Well, the main reason for this is probably the merger that took place. So this isn't a definite. This is you using your business acumen and applying it to the scenario. Pop that down as another note on here. The merger that took place during the year, which resulted in Clearco's now biggest competitor, so stating we've gone from first to second, subsequently reducing prices for ICL. Okay, that all comes from our question analysis, what we're actually understanding is going on, and presumably capturing a bigger slice of the market as a result. A greater market segment, market share in terms of it. Yes, they've got a larger percentage. Pretty spot on. Even though Clearco's actual price of ICL was $250 less than budgeted, so we've actually reduced it down, its sales volume still fell by 27%, so it was apparently unable to match the competition. So in other words, even though they lowered the price, the competition had lower price as a result, so this relates into sort of elasticity of demand now. But we don't need to go into that sort of level of detail. Stop showing off, James. Good grief. But more importantly as well, this is where the own figure rule applies on the right hand side. So the own figure rule here is a case of you may not actually have some of these figures as you go through, you may have calculated others. But the key thing here is applying your own figure. If you apply your own figure, analyze it correctly, you get the mark. Use it to your advantage, but it all comes down to that question analysis. So looking at the mix of sales between RLE and ICL of Clearco, there is an adverse mix of $36,521. Okay, stating it, first point on there, this is because, notice the language on there, which the sales of ICL were lower than budgeted. Okay, super duper. and then the sales of RLE were higher than budgeted. Okay, again stating because this is why it's happened. Since RLE has a lower standard contribution than ICL, this produced an, explaining why it's happened, adverse mix variance. This shift in sales mix could be partly attributable to the fact that the REL procedure is for people aged over 40, and there is an increasing aging population in Zealand. Okay, so stating back to the scenario what is going on, applying, as you can see from my notes on the side there, the figures and the facts. That is key here. If you don't apply it back to the scenario and you write a generic textbook answer, you're not going to get the marks. The examiner is not looking for that. Clearco has had to lower its price to make these sales of RLE, but again this is probably due to the increased pressure of reducing the prices because of the merger. They're no longer top dog, they are second, still doing well, but they're being, key word you could have added in there, they're being undercut. As a result, customers are going for the lower prices. So we've got another factor on here, which is not possible to quantify from the information provided. So actually saying there are limitations to what we've actually been provided with. We might need more information to make a more robust actual analysis, for which will invariably have had an impact on sales of lens treatments overall, is the increased availability of laser treatments to consumers. So talking about actual supply to the market now, given that 90% of the customers are now eligible. So just coming on to the next point here, for the less complex treatment, this side of the business may well have grown at Clearco. Okay, so these are other things in terms of growth where maybe one goes down but others may go up. We just need more information on that as well. Plus, I've got on the side that any other valid points that you refer your own figures back to with the scenario. There may be other competitors, there may be international sort of competition. Who knows? We don't have the full picture of the annual report, or if they're audited, or whatever it may be. So any other valid points, as long as it relates back to the scenario and what is being asked for, then that is really key. If in doubt, and if you've got a few minutes left in an exam, always refer back to here sales performance. That was the key thing in terms of if you're really struggling, you're trying to get down one more point, notice what is the key word in the requirement and think, how can I get another point down, another key sentence, relate it back to the actual performance on there. Overall, the sales volume variance is favourable for Clearco because of the increased sales of RLE. So actually stating which one was better. However, to achieve this, prices have been reduced, so lowering that margin, resulting in a significant adverse sales price variance of $653,000. These results are disappointing, and Clearco may have to rethink strategy moving forwards. So actually thinking from a business perspective now, how can we take the figures and thinking about what if you were the CFO or the CEO, or you're on the board of directors and you've got the shareholders to actually report to. Well, they're going to want share price to go up and their dividends. They want growth, potentially new markets. So any of these things are other valid points. Now, you'll also notice we've got Hammocks Co on there as well. I've done another video for this as well, which is on my YouTube channel. So hopefully you've enjoyed this video, going through it top to bottom as well. Check out that next one and make sure you're replaying this as well. Let's head back to the main screen now. Hope you enjoyed it. That is how you do a proper question analysis top to bottom. 3, 2, 1. Well, Mohammed, I hope that answers your comment that you left from my previous videos as well to help with your upcoming performance management and F5 paper. If you have enjoyed today's video as well, if you are new to my channel, feel free to give it a massive thumbs up, and the subscribe button will be at the bottom so you get access to all of my free materials as well. If there are any topics that you would like me to cover, or other modules, whatever it may be, leave it in the comments below with anything that, any feedback you've got from the actual video. I will answer absolutely every single query as well. The last thing I can say is, well, best of luck with your upcoming F5 and performance management examination. But as always on that bombshell, I'll see you next time. Cheers!